Hey gang! In this video, I'm going to pull back the curtain and share the exact investment strategy that allowed me to take an initial $5,000 investment and grow it to over $100,000 in just a few years. This isn't some get-rich-quick scheme or shady multi-level marketing deal. It's a tried and true method that anyone can use if they have the patience and discipline to stick with it long-term. Background. Let me give you a bit of background first. A few years ago, I was feeling stuck in my 9-to-5 job and knew I needed to start investing if I ever wanted a shot at financial freedom. I opened up a brokerage account with $5,000 I had saved up from doing side gigs during college. At first, I tried my hand at trading stocks and options, but I quickly learned that I didn't have the emotional fortitude for that high-stress, high-risk style of investing. I was paralyzed by fear of losing my hard-earned money and made poor trade after poor trade, slowly watching my account dwindle. The light bulb moment. Then I had a light bulb moment when I read about a different approach called value investing. The core idea is to buy stocks in great businesses when they're undervalued by the market. Instead of trying to get rich quick by gambling on speculative investments, it's a marathon strategy of letting your money compound over decades. I was intrigued by the simplicity yet profitability of this passive strategy employed by investing legends like Warren Buffett. I dove into learning everything I could through books, online courses, and connecting with other value investors. The strategy explained. Here's the gist of the value investing strategy that I've used. 1. Find excellent businesses with durable competitive advantages that allow them to compound capital at high rates year after year. Think companies with strong brands, smart capital allocators, high profit margins, and lots of growth runways. 2. Only buy their stocks when they're selling for a discount of at least 30–50% to their calculated intrinsic values based on evaluating their financials and future cash flow potential. 3. Have a rock-solid investment thesis for why you believe the company will grow profits significantly over a 5–10 year period. 4. Hold these positions patiently for years, letting the companies compound value while you collect dividends if available. Resist panic selling during temporary downturns. 5. As the company's cash flows and intrinsic value expand over time, the stock price will inevitably follow and re-rate higher, providing great long-term returns. 6. Reinvest dividends along the way through a drip plan to utilize the power of compounding interest. Examples of winners. To give you some concrete examples, some major long-term winners in my portfolio from adhering to this strategy include companies like Apple, bought at $25 per share in 2013 when doubters thought the iPhone had peaked. Netflix, picked up at $50 per share in 2012 when they pivoted to streaming. Amazon, accumulated shares at $300 range in 2014 when e-commerce was still unproven. MasterCard, built position at $60s in 2010 as digital payments were taking off. In each case, I did extensive due diligence on the company's competitive position and calculated a reasonable estimate of intrinsic value well above market prices at the time based on future growth potential. I was able to hold through volatility despite the naysayers, and my patience was rewarded massively over the following years as the business value compounded. The power of compounding. Now this approach may sound deceptively simple, but it's incredibly powerful when applied with diligence for decades. Thanks to the beauty of compounding, my initial $5,000 turned into $100,000 plus despite making no other new capital contributions besides reinvesting dividends along the way. Just by letting those great companies I own grow year after year while periodically adding more shares, the exponential growth kicks in. It may sound unremarkable at first, 12% here, 18% there, but compounding those rates over long periods is what creates centimillionaires from modest initial investments. I still have a long runway ahead with this strategy since I'm holding companies that should keep compounding for decades to come. My portfolio's intrinsic value keeps expanding, and the stock prices will inevitably follow. Counter to day trading. The reason I share this value investing approach is that it's the antithesis of the gambling mentality you see with day trading, options, crypto, meme stocks, etc. Rather than attempting to get rich quick through speculative bets, It monetizes patience. It's a get-rich-for-sure strategy as you harness the productive capabilities of great businesses over long periods. While it requires delaying gratification, having an ownership mindset, and doing real work to analyze companies up front, it minimizes risk once you've invested. Then you can kick back and collect the fruits of compounding your capital rather than stressing over each tick of the market daily. It's been life-changing money-wise but also psychologically for me. I hope this value investing framework resonates with some of you and provides a rational pathway to grow lasting wealth steadily over time. It all starts with making that mental shift from being a renter of stocks to a part owner of productive assets aligned with your holding period. If you have the patience for it and are willing to put in the upfront work, this investment strategy can allow you to turn even modest initial capital into a considerable nest egg over the long run while living a relatively low-stress life in the process.